All right, folks, welcome to the channel. Always an honor and a privilege to be with you. I hope you're all doing great. Buckle up, strap in. I got a hard-hitting pull, no punches, no sugarcoating it, no rainbows or sunshine. I'm just going to give it to you and give it to you straight. And friends, we got a crystal ball to look at today. A lot of people now, I've read the comments. I jump in the comments when I can. A lot of people in the comments, a lot of people much smarter than me in the comments. A lot of people helping each other in the comments. What a gift. What a privilege it is to have a channel where people are actually coming alongside each other and helping each other in the comments. If you're new, subscribe right away and jump into the comments and participate with this community. A lot of people doing some pretty cool stuff in there. Also, please, side note, be careful of the scammers. A lot of bots now. It's a compliment to me because I've got a channel at least that attracted, I guess, on one hand. But on the other hand, I got moderators trying to get in there and report the bots and the scams and the duplicate accounts. I will never ask anybody to WhatsApp me or anything like that. But I read the comments, I jump in when I can, and one of the things that's going on now, friends, is the $1 million question. Always for me now is, and I'm working with a lot of you guys. We're looking at properties right now. I've shown you properties right now where your cost to own is less than your cost to rent. A very good metric to use if you're going to buy property. As long as you do that, you see, you don't get hurt in real estate necessarily when you buy at the wrong time. You get hurt in real estate when you sell at the wrong time. So the people that bought at the wrong time in the bubble in the height of the crisis and overpaid and went above appraised values to do it, had they checked the property's rent range, if they had a loan and made sure their loan was less than the property's rent range, good to go probably, because if something happens to them, like a recession or a layoff, which we're having, they can always put a renter into the property and let somebody else make the payment while they get things figured out. And that's really what we should be thinking about anyways as we climb the property ladder. That's where you're going to make your money, not by owning your house, by owning other people's houses. So it all starts with one house. We'll be starting to look at properties moving forward and starting to sneak some of that into these videos. But the realities are this, friends. As we take a deeper dive, I know for a lot of us, we really want to know, where's the crash hotspots? We kind of know that. How far will it go? Well, we got a pretty good idea there. But the one thing I think that we have a hard time with is because in today's digital diet age, we're getting a lot of information in real time, right? We're very impatient. We want our information right away. It's like we want to watch our stock exchange. We want to watch stuff react in real time, right? And we've seen the crypto market be decimated. We see overall earnings in the stock market fractured and just getting decimated there as well. And it's just trading on any news headline, or when our Fed chair makes any announcement, all of a sudden it stalls and then it starts trading again. Very dangerous. It's a casino climate out there. And 95% of millionaires didn't make their money in cryptos or in the stock market. They made their money in real estate. That is, in fact, tangible assets, the path to wealth. But one of the things we're going to look at today is, I think, a very good leading indicator if you really want to know the health of the U.S. housing market and which direction it's headed and how fast. This is, in fact, a flash crash, just as fast as this housing bubble was created virtually overnight through market manipulation, a stimulus era that was unorganic growth, no organic growth, making real estate agents essential workers in a health crisis to try to stimulate the economy. Well, we overstimulated it and waited too long to calm it down, and then inflation reared its ugly head. We got a two-headed monster, and the government doesn't know how to put it back in the cage. The only tool they have is raise rates to try to calm it down. Unfortunately, the fallout is now huge job layoffs in the white-collar sector, which are, in fact, the majority of people who buy homes as white-collar wage earners. So we got a really big elephant in the room that most people aren't paying attention to. They won't believe it until it's blood in the streets, but they'll be paralyzed with fear and stuck on the sidelines. So we got to move forward and stay centered and surrounded with like-minded people, so we're less blindsided by this as it plays out, able to operate more efficiently within it. We are, in fact, going to be able to do that. And it's my job to take you guys along for the ride. I'm convinced I can do it by continuing to spread this message in a way that makes at least enough sense to get some people on board and save as many as possible. But the realities are today, friends, like we'll look at Redfin. We're going to bring up their stock values currently and see what's going on there. This is a really good indicator. And what we can also, side note, we have to understand Redfin, Open Door, Zillow, all these big real estate tech giants that wanted to get into the iBuyer program during lockdowns, make buying houses as easy as a click of a button. We saw what happened there. It didn't work. It failed. Real estate can't be handled like that. There's way too much that has to happen in a real estate transaction to make it as easy as clicking a button. Carvana has tried to do that with cars, and they're in trouble. So, that's what we're up against. But here's the really interesting thing for me personally. If you really want to know how far of a crash we could potentially see in many metros, if not areas all over the nation, and this will be a much different crash than previous crashes, I believe, because of our digital diet today, because contagion will be a much bigger component. In the last crash, we were on smartphones, but not nearly at the levels we are now. You didn't see people walking around like zombies down the street with their face buried in the phone. It was not nearly like that. Now, toddlers, grandma, everybody's got a smartphone, and they can't stand to be without it. We're on our phones constantly at a stoplight in line for store. We're on our phones constantly. My kids, my teenagers, it almost kills me sometimes, because it's a form of addiction now for us. We're spending way too much time on these phones. So they're directing our thoughts. And that's going to move these markets. Absolutely. We're going to see, like we've talked about, throw the playbook out the window. Data won't save you. It's going to be a flash crash. It's all coming. But the leading indicator, if you're looking for one to really get ahead of, is watch what the real estate companies, what their stock values are doing. In fact, let's bring up Redfin's right now. Take a look at them real quick. Then we'll meet back here so we can wrap it up. Let's get started. All right, friends, buckle up and strap in. Let's take a look at Redfin and where they're currently trading at the time of this video. They're currently at $4.90 a share. They were trading a year ago during the height of the euphoria, $42.05 a share. That's an 88% decline in their stock values, their company values, as they do layoffs, and they're not alone. Zillow, Redfin, Opendoor, they're all doing it. And look at this downward trend. This is, in fact, where the housing market is headed. Let's get back to the studio so we can wrap this one up. All right, friends, welcome back. So, yeah, Redfin, there you go. Once trading at almost $50 a share, down to $5 a share at the time when I pulled that screenshot of their stock values. Let me repeat. Once at $50 a share, down to $5 a share. The next stop is zero for them. The next stop is potentially bankruptcy. Redfin, Zillow, Opendoor, Realtor, you name it. Any of these big real estate tech companies, they're throwing people overboard. Layoffs in droves. They're trying to get back to a skeleton crew. They're trying to get back to just being cute, fuzzy Zillow, where they sell advertising or lead generation to agents. They flopped as an iBuyer. Redfin, they're in the same boat. Every single company that I just mentioned, if we pulled up their stock chart, a similar downward trend for them as well. That is what, in fact, is going to happen to our house. I mean, it makes sense. I mean, let's just cut to the chase. That's what's going to happen to our housing prices. It's going to follow what the big real estate companies are experiencing now. And we're already seeing layoffs occur. Real estate agents, loan officers, real estate companies. The writing's purely on the wall. Yet many of us, it'll be in the comments below. You guys will read some when you jump in there. My area is doing fine. Real estate is local. All areas will behave differently. Like I've always said, the area where I'm at, a red hot, euphoric Southern California market playground for the rich and famous, will be the last place to get hit in a recession and the first to rebound. But we will get hit too. We already are. I see the open houses coming like crazy. I see the price reductions. I see the new listing announcements. It's all doing its thing. It's all trending one direction. And the realities are, I'm preaching to the choir with a lot of you guys because you know what's happening here, right? We're trying to do a full-blown. The only way to calm down inflation is raise the federal funds rate to the rate of inflation. We're getting pretty close now. Then we'll probably try to see if it works. We don't know if it's going to work. That's the million-dollar question. Will it, in fact, work? Many top economists saying no. Even if we raised rates to the rate of inflation, it's too late, too little, too late. We waited too long. We've entrenched inflation now to the point where it's just not going to be able to dig its way out. We're potentially headed for, at minimum, a correction. A depression is probably the most likely scenario that we're going to be talking about here shortly, probably by next year. And a full-blown economic depression is what happens after that, when the bottom falls out, which you haven't lived through and I haven't lived through, but we might get that experience to do that. Now, the good news is this, friends. The time to invest is when there's blood in the streets, when the fear and the panic sweeps the markets like we're starting to see it already doing. There's actually buying and investment opportunity starting to present itself as we speak. There's a lot of stocks you can buy at a discount right now. I've shown you homes that you can buy at a discount right now. It's all happening. I think for most of us, we're saying, when's it going to end up in my backyard? And you guys know that I really like to invest in property that I'm close enough to drive to and visit and handle myself. So that's what we're going to look to moving forward. In final thoughts, I come to you as a friend, as a content creator. Somebody wants to see you not only win in real estate, win in life. Understanding the biggest artificially created housing bubble ever produced in world history could not sustain itself. Its reverse course. The big tech giant real estate companies, their stock values are in the tank. Real estate prices are going to follow suit. Mark my words. We're about a year out, I believe, before we see people have to be forced out of their homes, liquidate homes, walk away from homes, short sale homes. It all happens when you get into a real estate bubble. Anytime the real estate markets exhibits bubble behavior, they've always reversed course 100% of the time. I'm going to continue to blow the lid off it every chance I get because it's not only what we need, it's in fact what we deserve. If you appreciate the content, I want to humbly ask you to give the video a like, subscribe to the channel, leave a comment below. I would love to hear from you. Social media links in the description of this video if you'd like to contact me there, along with links to channels I've appeared on I think you might enjoy. If you need help buying or selling real estate here in America, I have the biggest network of top-rated agents in the world ready to assist you. It'd be our honor and our privilege to do so. Email in the description for you as well. If you're watching from your television set today and you enjoyed this video, I know you're going to love the next video, and there's an easy subscribe icon for your convenience. As always, thank you for your time. Please go make it count today. I'll see you on the next video.